The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Gail in Tampa. Hey, Gail, what's going on?
Hey, love your program. You're amazing.
How long have you been listening?
Oh, my gosh. Well, off and on for about maybe, 6 to 7 years.
Oh.
I mean, just on the radio. Didn't understand the TV. And then I go out to Seattle once a year. We have a trading club out there.
Okay.
And then he started talking in class about your book, and I'm like, wait a minute, that's the guy that I listened to in Florida. And then I started watching your TV live, and it's just amazing. I need to become a tigress.
Well, you're already a tigress. See, you've been out there 6 years. See, once you check in to TFNN, you can't check out. It's like Hotel California. It's pretty sick, I know.
No, it's great. And I have some gold I want to try to get over to you, and then I want to buy some coins for my grandkids. So I appreciate what you're doing. I think it's amazing. You're just really amazing. Thank you very much.
Well, I appreciate it. Thank you so much.
Now, Tom O'Brien.
Hi, everybody. This is Basil Chapman sitting in for Tom O'Brien. Tommy's away. It's my pleasure, my privilege to be sitting here in the chair to be able to take your calls at 877-927-6648 on the Tom O'Brien Show. I'm part of the TFNN team. I have a service called The Opening Call. Comes out every morning. Daily market letter. 6-7 charts showing all the different techniques that we use under the umbrella of the Chapman wave. We also show different time periods, the 120-minute chart, daily, weekly, monthly, so you can get a perspective of where we are. I show the Dow chart, the S&P. I just go through a number of the charts, plus, of course, the stocks or the indexes that we either long or short. So it's a very comprehensive look. You can actually get 2 weeks free if you go to the front page of TFNN. I'm sure that right now, this is just a perfect time to be looking at the technicals, and we'll go through it. You'll be able to see right here for the charts that I can show you live on Tiger TV. You will see these very charts. What I'm looking at here is the Dow. Now, the Dow had a very interesting day today. It went down. It opened down, it went up, it went down, and then it besides being almost 100 points down, it went up 50, 60 points, and then closed down at down 26 at 12,393. Now, what's really important at this particular point is that when you're looking at the charts, and let me just do this again. I'm going to go back here. I'm going to click on this chart, and I'm going just so that you can see in Tiger TV. There it is. Now, what we're looking at is that the low that was made on the low that was made last week on the 23rd of May at 12,311 ran up to two peaks. I'm going to explain the peaks in the Chapman wave, but I'm going to make it really simple. It went to two higher peaks, came back today to 12,316, 5 points above the previous low. That is the start of something that could turn out to be a very positive action, and I'm going to explain as we go through. Let me just run the numbers here. So the Dow was down 26. The S&P, the SPX.X, that's how I get it, the symbol. The S&P was, in fact, down 2.99 to 1310. It also made a higher low. In other words, the low that was made on the 18th of May at 1291. Today's low was higher. It went to 1298. That is very important because so far it's a pattern that I call. Now look at this. If you're looking at Tiger TV, look how beautiful this can be. You see, I'll draw a straight line down like that, and you will see that this looks like a lowercase h. That lowercase h has three scenarios. One is if the price closes below the left side low, and these are techniques that I'll be teaching in an online Master Traders class coming up a week from tomorrow. It's all day. It's from 9 o'clock in the morning until 5 in the evening. I'll be sending out a preparatory a preparatory email with some of the aspects that we'll be looking at in great detail. But before you even want to come to this, you can for free get a moving averages webinar that I gave a little while ago. That's a $99 value. You get 1 month of my newsletter free, the opening call, and there's a $200 discount if you get, if by the end of the day you sign up. This is really a bargain because you're really getting this for very little, and all day a webinar going through these patterns. Now, the first scenario is that if the price closes, let's take the S&P. If the S&P closes below 1291.98, even 1 penny below, that says, yes, you can rally again, but that rally will be limited to the previous peak. In this case, the peak of yesterday, 1334.93, or 2 days ago. That's the maximum, and then you're going to have to come back. Whatever rally you have, you will probably have to come back and retest the low. That's number one. If it doesn't touch, that's very positive, because it says that the price, if the price starts to rally, that rally can go above the previous high. That'll start leg C above 1334.93. And in this methodology, as you can see in these many patterns here, the fourth highest peak, peak D, is where you've got to be careful. So that's very positive. If it closes, if it goes underneath if it goes underneath 1291.98 and closes above, that says be careful. You're probably going to rally to the next major resistance, in this case between 1314 to 1319. So those are the scenarios. That's instead of the comp index, which was down. The comp index was down 10 at 28.27. Let's go to the Qs, the 3 Qs. Don't forget 877-927-6648 is the number to call. The Qs have had a little bit better action. The Power Shares QQQ Trust Series went down to a low on the 18th of 60.76. It went to this peak B and pulled back, but it's held very well. You see this bluish gray line? That is the 200-period exponential moving average, and it hasn't come back to that at all. If in the next 3 days it closes under that, be careful, because it's a left side, right side price time match in a big arch formation, and that says that in the time price match you could start to move all the way to the right to a lower level, and that says that if we start to break down, I have a low around about the 11th to the 12th of June as a possible retest of the 59.66 level. So we want to break that as soon as possible. You see these left side, right side, you see the green and the red lines? Those are price time matches. That's a technique that I teach. It's such a simple technique. You don't have to know the Chapman wave. You can use any other technique you want. It's additive to this particular technique, and it shows you the left side price time match that came in. Now let's go to the GLD. So the GLD is the gold. It trades at 1/10 the price of gold. It's the Spider Gold Trust. That's trying to make a support level here, because 148.60 was the low. That was on the 16th of May. Well, it's trying to make a low at 148.53. It broke it by just a little bit, so it's trying to rally. But this GLD looks to me like it's making that pattern that I call the H, the lowercase h. Look, there it is. There's that line. Here's the first little arch. That arch goes like that and like that. Here comes the second one. And we could even make a third one. And it's saying that the H becomes an M pattern. That makes the upside very limited to about the 155 to 157 area in the GLD at this particular point. If you go to bonds, now this is going to be absolutely fascinating. I showed for my subscribers, we've been looking at this intensely for the last couple of days. A little later in the show, maybe in the second part of the show, the second hour, I've been looking at the monthlies, because May closed today at 4 o'clock. I'm going to show you the monthly charts, because I discussed it on my show this past Friday, what we need to be looking at if certain parameters are hit on the monthly charts, because you have to wait for the end of the month before you can talk about it. So we'll talk about it a little later on. But bonds went right to, you see this green and red line here? In the bond, this is the daily chart. Well, this daily chart said that we're going into a resistance area. If bonds close, this is June bonds, if they close near the high of the data of 151 and 12/30 seconds, that would be a breakout. Instead, it's just stopped right there. The technicals, I use a MACD, the moving average, convergence, divergence, and the slow stochastic. That's really important to me, because they are both very positive at this particular time, except that bonds went to a high higher high, and the stochastic, although it's at 85%, which is very good, is way underneath the 90% level it was back in the middle of May. That's a heads up to say, hey, be careful. Let's put it together with a very important index. Well, first of all, let's look at the dollar. We're going to look at the dollar because the dollar has gone to, the high today was 83.21. I had to keep changing it because it kept going higher. 83.21, and the candle that formed said, if the dollar doesn't make a new high tomorrow, and instead starts to slide and goes underneath 82.31. This is the index. And the euro, EUR, USD, the euro dollar currency pair, which also made a doji candle, if it closes up and it's able to get into the 1.247 area, we could in fact have, together with the VIX index, which I consider absolutely imperative to watch, we could be making a very short-term rally reversal. I'll be back at 877-927-6648. Basil Chapman sitting in for the one and only Tom O'Brien.